All right, let's dive in. Today, we're pulling back the curtain on one of the most secretive, high stakes corners of the financial world: quantitative trading. We're talking about the AI wizards who are basically reshaping Wall Street one algorithm at a time. And this whole story really kicks off with a single, honestly, mind boggling number. Yep, that's it, $300,000. Now, this isn't the salary for some seasoned CEO with decades of experience. No, this is the base pay a top trading firm, Hudson River Trading, is offering a fresh graduate straight out of university to start work in 2026. So, what kind of job could possibly command that kind of money right out of the gate? This is it. The role is an algorithm developer, but you probably know them by their street name, a quant. Think of them as the modern-day code breakers of the financial world. But instead of cracking enemy signals, they're building the AI that deciphers the market's hidden language, turning just mountains of data into predictive models that can spot opportunities no human ever could. And that, right there, is the multi-trillion-dollar question. How do these quants actually turn raw data into profitable trades in the blink of an eye? What does it take to build these incredible systems? And, what kind of person even thrives in this kind of high-pressure world? Let's start decoding. You see, that $300,000 figure isn't just a salary. It's like a gravitational force. For the absolute brightest minds in science, tech, and math, it's this irresistible pull away from more traditional paths like academia. It represents a direct shot not just at incredible wealth, but at solving some of the most complex and challenging problems on the entire planet. So, what's the secret sauce here? Well, it's all about building what is essentially an AI-powered crystal ball. The whole goal is to see the future of the markets, even if it's just for a fraction of a second, and to do it faster and more accurately than literally anyone else on Earth. At its core, this is what we're talking about. Quantitative trading, or quant trading, isn't about gut feelings or some hot stock tip you heard from a friend. No, this is pure science. It's about finding tiny, fleeting patterns and glitches in the market that are totally invisible to the human eye, and then using technology to capitalize on them over and over again. Now, to make these predictions, the AI needs to be fed a universe of data, and we're talking way beyond simple stock prices. Of course, you have your standard numerical data, like price charts, but the real edge comes from the other layers. You've got relational data that maps out entire supply chains to predict disruptions. Then you have alternative data, which scrapes social media to gauge sentiment or even analyzes satellite images of oil tankers to figure out global demand. And then, maybe the wildest of all, you have simulation data, which creates entire fake markets so the AI can test its strategies millions of times before risking a single real dollar. Every single data type is a crucial ingredient in the AI's recipe for prediction. So what does the AI actually do with all that information? Well, it runs this constant lightning-fast cycle. It starts by trying to predict where prices are going to go. Then it optimizes the best way to make a trade without causing a splash in the market. It generates the final buy or sell signal, and then, and this is absolutely crucial, it manages the risk of that position. The key thing to get here is that this isn't just one algorithm. It's a fully automated system making decisions from start to finish. And just when you think you've got it figured out, the game is changing all over again. It used to be all about the numbers. But now, with the rise of large language models, the same tech that's behind tools like ChatGPT, quants can analyze unstructured text in real time. They can read an entire earnings report the second it drops and turn that into a trading decision before a human analyst has even finished the first paragraph. But listen, these incredibly sophisticated tools don't just build themselves. So who are the master craftspeople behind the AI? What's the true anatomy of a modern quant? While the money is, let's be honest, a massive factor, it's not the only thing. For a lot of these top PhDs who leave academia, the decision is also about quality of life. And as this quote suggests, fulfillment is a big deal. The world of finance can offer a kind of flexibility, like choosing where you want to live, that the super rigid, geographically stuck academic track just can't compete with. On a technical level, you have to think of quants as being bilingual. They speak two different languages for two very different jobs. Python is the language of the research lab. It's flexible, it's perfect for exploring data and building out new models. But when it's time to actually execute a trade, when every single nanosecond counts, they switch to C++. That's the language of the racetrack, built for pure raw speed. You absolutely have to be fluent in both to succeed. So, that stereotype of the lone genius locked in a dark room, just coding away? Forget about it. That is not how this works. Being a quant today is a total team sport. The problems are way too complex for any one person to solve. Success really hinges on intense collaboration and being able to communicate incredibly complex ideas clearly. It's so much less about individual brilliance and more about collective brain power. Okay, so let's say you've got the smarts, you've got the drive. How do you actually get your foot in the door of this super exclusive club? What does the path to Wall Street actually look like for someone who wants to be a quant? Look, the path is seriously demanding. It's a marathon, not a sprint. It almost always kicks off with an advanced degree in hard science. Think physics or computer science, where that kind of rigorous problem solving is just baked into your brain. From there, it's all about acquiring the skills, mastering the specific programming and statistical tools of the trade. But theory will only get you so far. Internships are, like, non-negotiable. They're the real-world audition. And while certifications can definitely polish up a resume, it's that hands-on experience and the professional network you build that really opens the doors. And then you get to the interview. And these things are legendary for how brutal they are. I mean, forget what's your biggest weakness. We're talking complex math puzzles and brain teasers designed to test your raw problem-solving skills under extreme pressure. It's an intellectual boot camp that weeds out everybody but the absolute sharpest minds. But here's the thing. Even after you break in, the race is never, ever over. The world of quant finance isn't standing still. The tech and the challenges are evolving at a totally breakneck pace. So what does the future hold? The real cutting edge is moving beyond just training a model once and letting it run. The new AI systems are designed to constantly learn, to constantly get better. Think of it like this. Post-training is like giving the AI daily homework to fine-tune it on fresh data. And test time scaling is like giving it more time to think before a big exam, so it can process a problem more deeply for a better answer. Both of these techniques lead to smarter AI, but they require an unbelievable amount of computational horsepower. And that need for computing power translates directly into an amount of spending that is just staggering. The investment in the AI data centers needed to fuel this arms race is astronomical. We're looking at a projected $400 billion in annual spending by 2026, rocketing up to a mind-boggling $1 trillion a year by 2028. To put that into perspective, this is one of the single largest technological investments in human history. Period. So, looking ahead, there are really three huge trends you've got to keep your eye on. First, the evolution of AI from just being predictors into becoming autonomous agents that can actually create and test their own trading ideas. Second, you can bet on a wave of regulatory scrutiny, focusing on things like fairness and stability. And third, there's a growing risk that the entire industry is becoming way too dependent on just a handful of giant tech companies to provide all the underlying infrastructure. All of this leads to a really fundamental question about where we're headed. As we move towards a market that's run almost entirely by code, a power shift is happening. So who is ultimately in control? Is it the human geniuses who design the initial frameworks, or is it the increasingly autonomous AI agents that learn, adapt, and execute all on their own? The answer to that question is going to define the next era of Wall Street. Thanks for watching The Explainer.